Everybody wants to be the best, but not everybody wants to do what the best do.
Well, I had a new goal in life, having people understand very clearly what my responsibility is, what I have to do my job well so the team can succeed.
There are certain fundamental truths in life. One is that everybody wants to be their best.
Well, the process to me is just a definition of the things that you have to do to accomplish the goals that you have. Obviously, if you don't have any goals or aspirations or sense of purpose in your life, then how do you define the process of what you have to do to accomplish that? So that becomes the most important thing.
Like there was like a fire burning within me and I refuse to accept that. And a lot of times we have the power within us to refuse things and not accept things and say, nope, no to you, I'm gonna do this.
We all want to be our best personally, and we all want to be our best professionally.
But with every setback, we need to understand that it's maybe God setting us up for what he's actually called us to do. For you or for me or for a lot of other people, our testimony was probably growing a lot more in the valleys.
It's all about leading, coaching, influencing our people and all of our partners, encouraging them to become the best version of themselves.
It's what we do. We wait for stuff to get easier. It will never get easier. What happens is you handle far better. So it starts with devoting time, lots of time, into developing the skills that are needed for whatever you're doing.
Because that's what the best leaders do all the time. They affect people so that they own up to becoming the best versions of themselves.
And I can still hear my daddy saying, if you say you're going to do something, do it.
We seek out the best of the best that they might guide us, motivate us, and inspire us to fulfill our potential.
That why and that vision of where you're going and why you're going there, you will know the way. And you're not going to let obstacles get in the way.
We're honored to be one of those voices, urging you to pursue and to wind up at your destination, best. Best is waiting. Meet you there. Good afternoon. Good afternoon. Is this mic working? I don't really need a mic. Button is green, Mr. Tai. Okay, good afternoon. Tai did tell you all a story. He did ask me a couple of years ago, and it was about 3 years ago. He said, Pat, what do you think about this whole thing? And I told him exactly what he just told you, which is either Jesus is coming back or real estate's coming back. I'm good either way. I think we're getting closer to Jesus coming back. We have a mic that works. Hey, listen, just stay with me for about 5 or 10 minutes. I want to pour into you a little bit. So here we go. If you choose, all of you, you choose to do what everyone else does in life, mostly people do, you'll get what everybody else gets. If you want better in your life, then choose better. And if you want best in your life, which every single person that came here today wants best, amen? Then all you need to do is choose best. It's not that complicated. Our choices in life write our life stories. Your choices, my choices. That's how your life story has been written to date. And so, when you wake in the morning, every single day, you make hundreds of choices. Little ones, and you make big choices as well. I hope and pray that the choice you made to come here today, I hope our time invested together inspires you, re-inspires you to be your personal, professional best. And I also hope that the education that you leave with you today allows you as a service professional to excel at a level that you never have before. I have a few disclosures. You've already heard one of them. I am indeed a Christian. Therefore, I might mention God, the Bible. I may ask for an amen. I likely won't say Jesus, although I just did. No, I am a Christian, but you know what? Church can sometimes be confusing. Some churches are quite confused. My definition, just so that all of you know, my responsibility in life is to love unconditionally every single person I cross paths with. They owe me nothing back in return. That deserves an amen. All right, my second disclosure, and this is probably not going to go so well. I am an Alabama Crimson Tide fan. I ought to rethink that second disclosure, don't you think? Yeah, when you're in Georgia country. But listen, I love Georgia too. I do. I love Georgia too. I just won't be cheering for them as much as I normally do on September 7th in 2 weeks. No, the reality of it is that the world we live in today is quite divided, isn't it? We should be for everyone. So I'm for Georgia. I'm for Tennessee. I'm for everyone. I just happen to be more for Alabama, but I'm not against anyone. So my son went to Bama, which is how I got to be a big fan. And my treasure went there as well. He loves Nick Saban so much, he wanted to stay as long as Nick was staying. And I told Kenzie, you need to actually, this isn't a 10-year contract. Nick has one, you don't. But the most important reason that I love Bama, Coach Nick Saban not only discovered, but he communicated that there was a process for players to become their best in life and for teams to become a best. He constantly talked about this process. And so I'm a huge Bama fan because of what I've just told you, but I'm also even a bigger fan of this concept of best. And in fact, if you want to be your best, choose it. And best is indeed a process. And I'm going to share it with you. So I need to separate the room into two. So right here, right down the middle, if you're on the left, you're on team best. You like that? Yeah. This side of the room, you're team rich. This gal over here, she likes rich better than best. She just looked at me like, that's nice. That's really nice. So, over here, team best, right? Repeat after me. After 3, I want you to say, close the gap, right? 1, 2, 3. Close the gap. That was good. Team Rich, are we ready? All right, so here's what you have to do. I'm going to say 3, and you're going to say the best exchange. Okay? 1, 2, 3. The best exchange. Close the gap. The best exchange. Good. We're getting someplace. Great crowd, by the way. Yeah, you guys are here because you're winners. So close the gap, best. The best exchange. Every one of us, all of you, you arrived here today. You know what you brought? You brought your God-given talents. You brought your unique experiences, your backgrounds. You also brought your whole story with you. It arrived here today when you sat in your seat. And while we have a lot of things that are unique about us, we do share 2 things in common. One thing is every single person here wants to be their personal and professional best. There is no debate about that. If there is, Dr. Andy Ward is our psychologist on staff. I'll let you talk to Dr. Ward, okay? Being your best is something that we all inherently want. I just believe we need instructions, a process about how to get there. The second truth, we all want to be rich, don't we? Really, really rich. Say it, I want to be rich, really, really rich. Don't we? We do. We all want to be rich. The good news is we can be our best and we can be rich. And if you'll pay attention for 5 more minutes, I'm going to give you a roadmap to get to both places. You don't think it's true? It is. I have good news to share with all of you today. Every one of us can get there. It's just about the choices that we make in life. So indeed, there is a process. Let's start with best. How did you get here today? Don't get nervous. How'd you get here today?
Like physically?
You drove a car. Or you were in a car, right?
Yes.
All right. Let me get more specific. You know how you got here today? Somebody, either you or someone else in the car, what's the first thing you did? You put in the address, the destination. This is where I want to go. And then You basically got a roadmap or instructions, and then you invest it in getting to the place you decided to go. And you also had an accountability partner. Whoever that GPS is, they will tell you when you're off course, right? You with me? So that's the place, that's how you get the best. You entered your destination in GPS, and you basically got in the car, and then you drove, you followed instructions, and you got there. And you had an accountability partner. Life works exactly the same ways. There is no one here that has 7 areas of life. Everyone has 6. You know what you have? You have family and relationships. You have health and fitness. You have personal finance. You have fun and recreation. You have faith and community service. And the 6th thing that we all share together, which brought us here, is business. We all have 6 areas of life. Do you know that 80% of Americans sitting in the crowd don't have destinations for those 6 areas in life? They don't have goals. Do you know that only 20% of the people that have goals write them down? Science tells us that if you have them specifically and you write them down, you are like 80% more likely to actually arrive at the destination. So here you go. If you have a pad, write it down. There's 4 things you need to do to be your personal and professional best. 1, you need to define specifically what best is in all 6 areas of your life. And you know what that looks like? A lot of people say, I want to get in shape. That doesn't mean anything. Losing 20 pounds in 60 days, that means everything. It's very specific. The second thing you need to do, define the roadmap. What's the game plan? There's a million game plans to get to the destinations that you would actually describe for yourself. The third thing you need to do is you need to invest every single day. Don't spend your time, invest your time doing what you need to do, when you need to do it. And all the leaders in the room know exactly what I'm saying, and then do it a little bit better tomorrow. And the last thing you need to do, you know how y'all are fans for Georgia? Give it up if you're a Georgia fan. You know, you all have fans in your life. You know who they are? Spouse, significant other, children, parents, the rest of your extended family, all of your friends, they're all of your fans, and you want them cheering for you in life. They are your accountability partner. The 4th thing you need to do is tell every single person in your life that you care about and cares about you exactly what you're trying to get done so they can cheer for you and also be your accountability partner if you get off course. If you do that, you know what you'll do? You will
close the gap.
Again, you will close the gap. Your full potential, best, and where we live, you will close the gap every single day. Not complicated. All right. If you want to join us, go to supremebest.com. We have a best GPS there. These goals are easy to fill in. You'll be on the journey. And if you're not going to do that, you're not going to get to where you ultimately want to go. One more point I want to make, and that's to my friends over here. What do we want to do? Get rich. Want to get rich. And what are you supposed to tell me back now in return? Luke, I put you in charge of this whole group. It's the best exchange. All right, so here's what the deal is. If you want to get rich in life, and I'm talking about really, really rich, I promise you that you can. Okay? I promise you can. But we're going to have to redefine rich. You see, when I said get rich, really rich, you know what most people think? Money. Financial wealth. Last night before I went to bed, my 87-year-old pops, who's also known as the source in our family, he went to the hospital. I worry about my pops at 87 years old. It might be the last day I get to ever talk to him. So I did get a chance to talk to him. I woke up this morning, and he's home from the hospital. He doesn't have a lot of money, but he is the wealthiest man I have ever met. I have never met a richer man in my entire life. And his entire family thinks exactly the same thing. So rich, redefine it today. It's about relationships, because relationships are by far not money, not cars. Relationships are the most important thing in life. So I'm going to give you the 4 things you need to do to get rich in relationships. You ready? There are 4 things we need to do here to get rich in relationships. Number 1. Is everybody ready to write this down? This is like the holy grail in life. Okay? Seriously. I should tell you first, you know why we don't do relationships well? mean, they are really the most complicated, frustrating, and painful part of our lives. Amen? And you know what it is? You all know. It's because everybody that we're in relationship with, they just don't do what they're supposed to do. And say what they're supposed to say. It's not about us, it's about them. If they would just do it the way we want them to and say it the way they're supposed to, everything would be just great, but they don't, they won't, and they can't. So here's the deal. You need to do 4 things. I watched my dad do this. That's why he's so rich. Serve others, even if and especially if they don't deserve it. The second thing you need to do is you need to make sacrifice for others, even if and especially if they don't deserve it. The third thing, you need to accept others. Don't judge others, accept them and then invest in them to leave them better, even if and especially if they don't deserve it. The last thing, and this is the hardest thing to do, but it is the pathway to rich, you need to forgive others, even if and especially if they don't deserve it. Serve, sacrifice, accept, forgive, and you'll be on the road to rich. Best, rich, the next exchange we're going to make, the best exchange. And I look forward to meeting you all there. Let's get rolling with Doug Duncan. He's here today to help give you some information. And as I told him last night, if the news isn't that good, just say it is anyway, okay? Give the crowd here hope, because hope deferred makes the heart sick. We just need some hope. We both agreed that the best way to describe the moment is it's been the coldest winter ever, and he grew up in Minnesota, right. He was talking to me last night about them maybe getting a house up in Minnesota, and I was thinking, why would you do that? It's really cold up there. But anyway, imagine like the coldest winter ever that you can picture. And I told him last night, I said, that's how it's felt to be in our business the last 3 years. And if we can just get a thawing, right? Like feel like it's thawing a little bit. So we'll talk about that. He was recognized by Bloomberg News, which is one of the top news organizations in the world, as one of the 50th most powerful people in real estate. Inman, a news source that regularly covers us, this industry, named him one of the 100 most influential people in real estate. He's won a number of awards for forecasting, and you'll find out here in a few minutes why I think he wins so many awards forecasting, because of the way he forecasts. Very smart guy. But he most recently, he spent the last 17 years of his career as the Chief Economist for Fannie Mae. In case you don't know, Fannie Mae is not a woman. They're the Federal National Mortgage Association, and they basically create all the ground rules for lending in our industry. They're the largest housing finance company on the planet, and he was the chief economist of that group. So please, again, join me in welcoming Doug Duncan.
Thank you.
He also told me to tell you he apologized for not wearing his cowboy boots today. I told him you become famous for your boots.
I was taking a cue from the leader. I got the white rims on the bottom and over there, you know. Which, by the way, let me compliment you. Before we got started here, I was standing where a number of your staff were greeting people as they came in, and you are the organizational culture and ethos is driven by the leader of that culture, and I have to say, the hellos and greetings were genuine hellos and greetings, and everybody got a smile, everybody got a personal hello. It was very impressive.
Awesome. That's the heart of our team, which is the most important part of our organization. Just to give you some insight to my economist friend. So when we invited him about 2 months ago, month and a half ago, I said, Doug's timing's going to be great. The Fed's going to be meeting. Maybe this will be a good time when the thawing can start. He said, I only have a couple of requests. I said, okay. And he said, so I need a conference room where I can watch the Fed's news conference. How many of you, show of hands, watched the Fed's news conference yesterday? That's what I thought.
What do you people do with your time?
So
Cocktail party.
So I read everything, but I don't watch their news conference. So I was like, all right, I'm going to plug in with Doug and watch the news conference. So we got plugged in, and we have the TV on in there, and we were having some problem with our internet yesterday. And I was looking at Doug sitting in the room, and it's like 5 minutes before the news conference, and I was thinking, I know that look. When Alabama football is playing and the satellite's going out right before the game and freaking me out. Doug was freaking out yesterday.
That was the look.
But we did actually get through it all. So we're going to talk a little bit about the Fed. We're going to talk about inflation, which has really caused the winter. We're going to talk about employment, which may be the thing that helps thaw the winter. We'll talk tariffs briefly. And of course, we'll spend a little bit of time on housing. So I want all of you to know the best that you possibly can, up to speed, so that you can actually talk to your customers, because a lot of information and a lot of misinformation in the world we live in today. So I want Doug, you, because I've been a student over the years and a friend, I want you to confirm what you've told me over the years is still true for all of our friends in the audience, that there are 3 key drivers that all of us can pay attention to if we're looking at our industry. Number 1, demographics. Number 2, employment. And number 3, affordability.
Correct.
So we're still those same 3 drivers.
Those are the things that matter.
Yeah.
How many people are there? How do they form households? What kind of money do they make? And how affordable is what they're attempting to achieve, their goal? Well, how affordable is that?
And one time Doug told me that the employment thing has always mattered, with the exception of like the years 2003 to 2007, when you didn't have to have a job and you could still get a mortgage.
Yeah, it was impressive. We tried that.
We tried that experiment?
Yeah, did not work out that well.
Yeah, for those of you who weren't in the industry at the time, trust me, we don't want to go back to that experiment again. So just to give you all some context today, demographics in Georgia are in the top 5 states in America. That is ingress, egress. There are more people coming than leaving. That's a great thing. Check the box. Number 1 is good. Employment in Georgia. Unemployment nationally is at a record low. Georgia's even lower. We're in the 3s here in Georgia. So check the box demographics. Check the box here in Georgia in the area of employment. The challenge, and all of us understand this, is affordability. And affordability nationally is at an all-time low today. So what happened, and it's the impediment, what happened, and Doug has told me that we have prices 4% to 4.5% historically. That's the annual increase. We had 2x that from 2020 to 2025. So we went up 47%. Normally, the market would have went up 23%. So that started it. And if you owned a home, you're like, hot dog, I'm rich. Until you got your new tax bill, which reflected the fact that your home is now worth a lot more money. And then your insurance man said, well, if I have to replace your home, it's going to cost a lot more money. And the combination of those 3 things, in addition to interest rates, has created an unprecedented challenge in our industry. It's just that it is unprecedented in our business. What are your thoughts about affordability right now, my friend?
Well, you know what, this past year, in 2025, it looks like there will be about 4 million existing homes sold. That's the same number of existing homes sold in 1995. And there were 80 million more people in the United States today than there were in 1995. So it just gives you a sense of the imbalance of homeownership relative to the population. The affordability question is really 2 or 3 things. One is incomes. Incomes have been growing the last couple of years, so that's good. Not excessively, but certainly growing, so that helps. Recently, a little bit of a backup in interest rates, so we'll see whether or not we're going to talk, I know, some more about that. But the big question has been the amount of housing that's available for people to choose among. Well, one of the things that's interesting to me today that suggests we're not through the entirety of the dislocation is that the number of completed new homes available for sale is the highest it's been since just before the 2008 downturn. that suggests that the affordability issue is still dramatic across both new and existing homes. One of the other things that that is a theme that underlies some of this is people call it the lock-in effect. The fact that you got a 3% mortgage, you don't want to move and give that up. So on Monday, I spoke to the AICPA Bank Accounting Conference. It's basically about 1,000 accountants in the room. I just accept that speaking for the rocket party that they have.
There's a rocket party?
I don't know. The choice. What I told them, I said, it's a real compliment as an economist to be invited to speak to 1,000 accountants because, you know, economists are people that are pretty good with numbers, but we don't have the personality to be accountants. The room was silent.
They're still trying to figure out what you said to them.
I said, I'm never sure who gets insulted by that. Then they laugh. But I asked them, I said, how many of you own a house, 3/4 or more of the hands went up. I said, how many of you have a mortgage of less than 4% on that house? Almost the same number of hands went up. And I said, so if you are required to move, how many of you will keep that house and rent it out and use the rent to subsidize the mortgage in the place that you go to? And 3/4 of them raised their hands. So there's this real dislocation in the economics of the business that would simply convert those people to rental owners and, in other words, single-family rental investors at the same time as being homeowners. That's kind of unprecedented in terms of the magnitude of that market.
But you're such a nice guy, really nice guy, that you just sold a house with a 3.5% mortgage. Let's give it up for Doug for being a contributor.
And the mortgage was here, so I don't know. But Pat had sold it, so it didn't punish me for paying it off. But I also sold it at above list. So there's hope. It's in the DC market, which is a pretty strong.
You know, and Doug and I talked at dinner last night about this. There is indeed some truth to the lock-in effect, but there's also truth that many of those people who have a 3.5% mortgage, they did not anticipate values going up so high, nor did they anticipate taxes going up so much and insurance. So there's a lot of people that are locked in on rate, but their cash flows have not kept up in income with their taxes and insurance. So I wouldn't give up on them just yet. Doug, let's talk about, before we move forward, I want you to tell the group here, you won a number of awards for your forecasting. Tell them your rules for forecasting.
There's 3 rules. If you give a number, don't give a date. If you give a date, don't give a number. And most importantly, if you get it right, don't look surprised.
You know, when I was rereading the bio to introduce you, I was thinking, no wonder you won all these forecasting awards. You got the best model ever. All right, so we're going to get to your forecast, or the forecast for housing, your best thinking on the fourth quarter of this year in 26. Before we do, let's talk about the Federal Reserve, because of course they've been in the news a lot lately. And I want all of you to remember one thing. Doug told me this years ago. When the Fed is in the news, it's never good. You prefer them to be out of the news because then things are just rolling along in the economy. When they're in the news, either things are too good and they're about to stop them from being so good, or things are really bad and they're trying to figure out how to rescue them from being really bad. So they've been in the news a lot. Why don't you do this? Paint real quickly a picture so that everyone, when they hear about this evil organization, they're not evil at all. But what is the Federal Reserve Bank? How do the Fed members and the chairmen get selected? And who does the Fed report to?
The Fed is a quasi-governmental organization. It's composed of the Federal Reserve Board of Governors, which is in Washington, D.C., and 12 district banks that are distributed around the country. And then there's lots of branches to them and all of those kind of things. The leadership of the 12 district banks are selected by the bank advisory boards, who actually have stock in the district banks. and recommend a president to the Federal Reserve Board in Washington, which then, if ultimately approved, they become the president of the regional bank for a 5-year term. It can be renewed, but basically for a 5-year term. So there are those 12. Then there are 7 presidential appointees to the Board of Governors of the Fed. And one of them is the chairman of the Fed. So those 7 positions are actually 14-year terms, and they are fixed in time, so they're staggered. And the purpose in creating it in that way was to allow for greater independence from current political pressures, to leave the decision-making on monetary policy with an independent from political pressures perspective. The reason for that is that there's very strong empirical evidence that if the central bank is driven by the political choices of the legislative or executive branches, the result is a higher rate of inflation going forward. That's very, very strong science related to that. So the issue is that very few governors that are appointed to the Federal Reserve Board actually serve a 14-year term. So, for example, if someone is in the 7th year of their 14-year term and they resign, the person who replaces them is appointed starting in the 8th year of that 14-year term.
Got it.
The chairman is different. The chairman is a 4-year term, and when that 4-year term expires, they are still a member of the Federal Reserve Board. To my knowledge, in modern history, let's say post-1950, I think there's only one person that was chairman and stayed on after they were no longer the chairman. The case with Chair Powell is that his chairmanship expires in May of 2026, but his term doesn't expire until 28. So he could conceivably do that. The last person who actually served a 14-year term, Ned, he termed out in the late 1980s. So it's been a long time since somebody served 14 years.
And who do they report to?
They don't report to anybody.
What a great job.
Yeah, exactly. But there's a lot of people who have opinions on them, that's for sure. Their responsibility is twofold. One of them is to maintain stable prices. It does not, the law or regulation does not say 2%. That's a choice they have made to represent the intention to maintain stable prices. And the other one is to maximize employment. This will be a Doug opinion. The part of the challenge for them is that they are a financial institution and their tools operate in the financial markets. The setting of the overnight funds rate, federal funds rate, is a financial measure, interest rates. Labor is in the goods sector of the economy, not in the financial sector. So they've been given part of a task that really is in many ways outside the tools that they have to operate. Nonetheless, there are 2 mandates.
You may wonder why we're staying on the Fed for a minute. It's really important. If you were educated at a high level, and you just got educated at a high level, when you leave, when your customers think that because the Fed yesterday reduced the Fed funds rate by 1/4, everyone immediately construes that means fixed rate mortgages just were reduced by 1/4. Those things tend to trend together over time, not always exactly at the same time. And we've seen that more recently than ever before. So
if you go back to last September, when the Fed cut by 50 basis points, mortgage rates went up.
That better not happen again.
Hope not.
I don't think it will. The scenario is a bit different this time around. So they have a dual mandate to keep full employment and to keep inflation. They've self-imposed it at around 2%. We're not at 2% today, which is part of the debate. And the other tools, and the tool they have to carry out is the cost of money, interest rates. That's what they've used to affect their dual mandate. We spent yesterday going through the dissensions that were at the Fed. So there's 12 voting members.
Yes, there are 19 total members of the Federal Open Market Committee.
And they all opine.
They all attend.
Yeah.
But the 7 presidential appointees plus the Bank of New York, the Federal Reserve Bank of New York is always also a voting member because that's where the actual monetary policy execution takes place, plus 4 district presidents who rotate through the voting process.
So there was a huge, and you made a comment to me yesterday, I asked the question, there were a number of voters yesterday who said we shouldn't lower rates at all. Then there was the majority that said, yes, we should a quarter. And then there was one new member that said we should do more than that. We should do 50 basis points. And I asked you about history and how often there's that many dissents to the consensus. And you told me that like 2, if it's 3, the Fed chair would usually just resign. Tell us about that.
Yeah, so let's differentiate between the dot plot, which is not actually a plot.
Plot would be where you finally rest yourself.
I was just trying to see if there's any conspiracy theorists in the audience. The dot plot is at one of the meetings each quarter, the members of the committee give their personal views of the state of the economy and the likelihood of making changes in the Fed funds rate target. So then when you see the actual vote, there are only 12 people that vote. So in the dot plot, there was a big distribution, a wide distribution of what people thought both economic activity was going to look like, what inflation was going to look like, what employment was going to look like, and therefore what they thought should be right going forward with rates. Wide dispersion there. When the actual vote was taken about what to do yesterday, there was only one dissent from that vote. Even though you can see in the dot plot there's a lot of disagreement about the truth. That one dot plot everybody speculates on, that was the recent presidential appointee. The dots themselves are not identified with the specific member, and so you don't actually know for sure who spoke. But if in the actual vote, it's likely to be more than 2 people dissenting, historically, the chair has stepped down, simply because their view, as I interpret it, their view is that it would be more important to financial market stability for them to be the committee to be led by someone who had more of a consensus than if they
draw consensus. So we're at a very unusual time.
Definitely.
With regard to the Fed, not just with the president.
No, this is a
the Fed itself.
Inflation expectations, where's employment going, what are the tariffs actually doing? There's more variables in play. Let me make one comment about the tariffs. We have been through a period of over 50 years of declining tariffs around the world, so that the share of goods that are traded which had a tariff on them was less than 5% of total world production. This is a reversal of 50 years of decline, and there's no one that has experience in how this works, so that's a big contributor to the uncertainty.
We're going to show you a graph in a few minutes, and I think you'll get a full picture of what we're talking about. The Fed mandate, what they're supposed to do, and what tool they use, and how they've been dealing with both inflation and soon to be, it feels like, the employment market. So let's take a minute now to review that. And I want to start out by telling you that this is 2019 was the last normal year, really, that all of us, from an economic standpoint and maybe otherwise, when we had in our country. So we finished 2019, and I asked Doug, I said, so let's start 2020, January, BC, before COVID. Let's.
Nice. Oh, good call.
I told you I'm a Jesus lover. So it's BC, it's before COVID. So inflation was under 2%. CPI was a little bit over it, but inflation was under 2%. Unemployment was under 4%. So it was actually better than it is today, okay? All quiet at the Fed. The Fed funds rate was 1.5 to 1 3/4. Today it's 4 1/4, 4.5.
4 to 4 1/4 now.
Yeah, 4 to 4 1/4 after yesterday. And 30-year fixed rate mortgages in January 2020 were 3 3/4. So that was the condition. That year, we sold 2019, and it was not a red hot real estate market. It was a normal market. We sold 6 million homes. Doug just told you a few minutes ago, we just finished last year a little bit under 5 million, and we're going to hit less than 5 million again this year. So you see where normal is and where we're actually running. That was the last normal year, and it was COVID that changed everything and thrust the Federal Reserve into the news, and here's why. March, April 2020, I'll never forget, I had Doug on a program in February. I said, is this thing, this flu, is it a black swan, which is one of those events? He said, I don't know, it could be, could very well be. And he said, we've never had to deal with like health issues in the past. Well, 2 months later, we're in the middle of an all-out event. You all, I don't want to, give you PTSD, but that's what happened. We shut down businesses all over the world. We said, everyone go home. That's what we did. Millions of jobs disappeared overnight. The highest unemployment rate that we've had since the great, not recession, depression, showed up in 60 days, just like that. So the Federal Reserve sitting on a 3.5% unemployment rate, all things quiet, and within a very short period of time, that was not their decision to send everybody home, but everyone was sent home, and we unemployed people to the extent we ran up to 14.8. Well, the Fed's dual mandate is 2. Full employment, we don't have full employment anymore. And so they're responsible. What did they do? They dropped interest rates to 0 immediately. They did some other things with interest rates too, so we actually had kind of negative rates. And that's what you're seeing. And then fiscal policy at the same time, which is the president and legislators, what they did is said, we should help too. So now we closed all the businesses down in the world. But we said, here's $5 trillion to consumers. Stimulus, PPP, double unemployment checks. We gave people a lot of money. Forget the politics of it. It was just what we did. We printed $5 trillion, basically, and we gave it to consumers. We said, here, it's more money you probably have ever had in a while. Go spend it. But the counterparty who makes goods and services, they were no longer working. That's called supply and demand mismatch, and now you are off to the races. So isn't that the perfect recipe for inflation? Fed goes to 0 overnight, and we print $5 trillion and give it to people, and there's no one working, and we tell them to go buy stuff?
If inflation was the goal, you achieved your goal.
I'm driving like 2 months ago, talking to Doug on the way home, and I go, feels like, I don't cook a lot, but if I was like making an inflation recipe, this would be perfect, wouldn't it? And he said, yeah. And I said, well, how did Chairman Powell miss it? Say what you said. You can't. You don't work there anymore. You can say whatever you want.
Well, they definitely missed it. There's no doubt about that.
Hold on. He said, he's a lawyer. I said, what do you mean?
That is also true.
I said, what do you mean he's a lawyer? He said, he's a lawyer. He was not suggesting he's not thoughtful about the economy. He could have never had this job if he was. And by the way, President Trump put him in the job to start with. So just to square all the circles.
One thing to think about is who actually would be someone that would be qualified to take that job. And it's not just economists. In fact, I would argue if the Fed had less economists involved in the discussion and had more people with experience in corporate finance, in banking, and some other financial sectors that actually saw how the roots of monetary policy worked at the street level, we would probably be better.
So we go through this conversation. If you look at this graph, we went past 3 on inflation targets, 2, on our way to 9. If there was a critique given to Chairman Powell, and there was, he was asked at one of these news conferences about inflation. And when they said, what do you think about inflation? He said, we think it's
Transitory.
In fact, I gave Doug a t-shirt that life is transitory, because we've had some good conversations about transitory. He actually said he went home and opened up his dictionary to figure out what it meant. What does it mean?
Not permanent. That's a pretty wide hole.
He's a forecaster.
Yeah, you can drive your Ford F-150 through that hole.
Through that one, right? So
I take it that's why it was suggested I sleep with an Oxford English dictionary. Is that,
yes. So if you look at the chart on inflation, if they have a dual mandate, so now inflation's out of the gate, and they say it's transitory, so they wait, and then the fire burns. And so now they have to go on the attack, which started in 22, which is raising interest rates to put the fire called inflation out. And all of us witnessed that. In fact, we were cruising along in the first half of 22, and the market was pretty good. Rates were about 4.5%, and within a 60 to 75 day period, they went to 7.5%. That was the fastest move in the 40 years of my career I've ever seen. And that's when Tai said, how do you think this is going to work out? And I told him, I don't know, but.
let me draw a parallel for you. So when you're thinking about the national macroeconomic data and then reflecting on housing, which is something like 17% of GDP, if you include broker commissions and new construction and all that, housing is about 17% of GDP. So when you got that burst of inflation and you got the monetary policy, which both expanded the Fed's balance sheet and set rates to zero, you set off a related inflation in the price of housing.
Yes.
You fundamentally changed the supply and demand characteristics by changing the funding cost of that asset. Because supply can't respond nearly as fast as demand. So while I was at Fannie at that time, we would take each market and divide it into thirds by price, and then calibrate the speed of change in prices in each of those thirds in each market. And in every market, the bottom third was accelerating the fastest, followed by the middle of the market, followed by the top. We went back then and we calculated how much transfer of income did households get. If you are a household of three, two parents and a child, and you were under all the caps of the rules for what you could get, you got basically $11,000. So if you had already saved some money to buy and added $11,000 to that, you can see why the acceleration took place in the the entry-level segment of pricing. So it's one of those things where policymakers do what they think is best at the time, but they rarely think about second-round effects because they're so focused on the first-round thing they would like to achieve. So housing actually, in the subsequent years to that rise in rates, has been suffering that backside effect of monetary policy.
I think something else happened too that increased demand, which is, people went home, so they usually went to work and they left their spouse at home. Then they went home and everyone was there together and they were like, we need a bigger house. I think there was a bit of it. So if you look at this chart, you see unemployment when COVID happens goes through the roof. At the bottom of the chart, the Fed drops to zero. And that's to affect the unemployment rate and see what's happening with unemployment. Here it starts coming back down, right? So they're winning. The problem is the fire called inflation started while they were at zero on interest rates. And so they shifted their attention, but it was a bit late. Probably that's why the famous name of too late has been attached to Jerome Powell. And nobody would have wanted to be in that job. He had brown hair when he started. It looks like the president to me. So inflation is now running about 3%. The debate argue up and down from 3%, and the direction is a bit of a concern right now. But it appears that the policies that have been going on in Washington since the president came in, those fiscal policy changes are certainly different. Tariffs, DOGE, immigration. All of these things are vastly different than we had in the previous administration. So there's a lot of that that's going on right now. Feels like the Fed is now shifting their concern to employment. That's what happened yesterday. Tell us about that.
Yeah, clearly, and that's the reason to watch the press conferences, because when they release their decision, it's basically a one-page document that says, this is what we decided to do, this is why we decided to do it, and these are what our objectives are. And then there's a second page which talks about, here's how we will implement it. In that presentation, or in that document they release, there's not an expansive enough view of context. And so the press conferences actually give you a lot of context as the various reporters cycle through with different perspectives based on who they write for. So it's one of the things that he said, which now the market is trying to ascertain the real reason he said this, was that it was a risk management cut. So there's a lot of risks that they considered. The risks related to tariffs, what will ultimately happen when the tariff discussions are completed. There's the risk of politicization. The market will have to consider that. There's the risk that the slowdown in the economy because of the uncertainty in the executive offices of businesses is actually going to tip us over into recession. And let me explain what I mean by that on the employment side. What you've seen, if you watch the monthly release of payroll data, for the last 4 months, all the jobs, it's a little bit of an exaggeration, but not much, almost all the jobs have been created in healthcare and social services. Both of those are directly or indirectly funded by government. What it means is that the private sector is waiting to see when will this uncertainty be cleared. So the Fed has to think about that, because the cost of credit for the corporate sector and the financial sector is all impacted by the decision that they make on interest rates. So there's probably more kinds of uncertainty in the marketplace today than what I've seen since the days of Paul Volcker.
Yeah, so y'all pay attention. The first Friday of October, first Friday of each month is when payroll job numbers come out. Those are always market movers in our business, interest rates. The next print that comes out is huge because they just had this meeting. There'll be another one in October, and it feels like the trends are materially softening for employment. That happens, and you look back at this chart, that's why the Fed actually risk managed and reduced rates, because they're starting to now concern themselves that we may have a sick employment market, or a market that is certainly weakening in a big way. That will bring lower rates. And by the way, for everyone's purposes, Tai, put up those other two graphs now, if you would, so we can see those, because that's a good one there. Yeah, so 30-year mortgage rates, they don't track Fed funds, what happened yesterday, that day, or maybe even that week. But over time, they generally get in trends with what the Federal Reserve does, because the Fed is actually pretty darn good at using their tool to affect the economy. They've just been caught in the COVID event, and I like to think about it now, that is COVID. It was like an earthquake, massive, creating a massive tsunami, and we're still getting the waves from that tsunami even today, 5 years later. That's how big this event was. Living through it was, social distance, all the stuff that we all went through, but the financial events that were going on, both the $5 trillion being spent, interest rates, the Fed's been in a firefight now for quite some time. Do you think that the 1/4 point cut yesterday, do you think it was the right move?
I think so. I think they, while I'm very much, as you know, a fan of 0% inflation, and inflation is running above their 2% target and running further from it, I think the uncertainty related to the impact of immigration ending and the restatements of the labor market data, which got a lot of coverage. There's a lot of things that are not well understood at the moment. And a 25 basis point cut, this is not going to change the world, but if it changes the sentiment a bit, then that would be helpful. And I have to say, I was watching Pat while we were watching the press conference, and Pat was watching the 10-year Treasury, and it came down and it broke through 4%, and then it went back up. I thought he was going to order drinks. I thought he was like into it. So you do this for a living?
No, it's a roller coaster ride. The market is interpreting every single thing he said. But we're at a really interesting place. We did spend a lot of time on this issue last night. Watch for the next 30 days, October, November employment numbers. If those are really weak numbers, the Fed is going to continue to strongly consider reducing rates and mortgages at some point, if indeed they do that, and inflation doesn't start back up. If that stays relatively tame, we'll start seeing rates thaw. And that we've already seen that happen in the last 30, 45 days. We've seen a pretty big movement down. We forget that it was over 7 for a long period of time, and now we're down in the...
That's a measure of the expectation of weakness in the economy.
That's right.
And the dot plot suggests 2 more cuts of 25 basis points each this year, one in October and one in December.
You know, another point on immigration. Forget the politics of all of it. 2.5 million people a year were coming in. They were getting roofs, cell phones, and they were eating. They were consumers. And then you'd go get a job. That's a stimulus for an economy. You stop 2.5 million people from coming in. We were just talking about Georgia earlier, right? Ingress, egress. And you just have fewer consumers coming in. So there are going to be some likely slowdowns from that, and then some labor issues from that as well. We don't know the full impact of both of those. All right, so let's turn the page if we can. Let's move on to some topics that this crowd really cares about. The tariffs, real quick, cause inflation.
They can, but they don't have to. In the absence of people being given more money, tariffs are just a change in relative prices. If you have in one option oranges and in one bananas, and you suddenly decide to put a $2 tax on bananas, you're probably going to see a pickup in the consumption of oranges. So that's in the absence of somebody saying, okay, well now I'll give you another $50 to buy apples and oranges, but there won't be any more, oranges and bananas, but there won't be any more of them. Basically what happens is $100 more is spent on the same number of oranges and bananas. That's inflation. So it just matters whether or not we continue running these huge deficits that we do, which is more spending than tax receipts, and whether the Fed slows the creation of money.
So just finishing this part of things, the last 5 years, the first 2.5, 2021, half of 22, best 2.5 years in housing in the last 25 years. The last 2.5, 3 years now, the worst 2.5 to 3 years in the last 25 years. Not even close. We went back to 1995 and looked at numbers then. So the reality of it is that seasons do change in life. They change in weather. They change when you get a little bit older. They do change. This will not last forever. Since I now adhere to Doug's forecasting, I'm not telling you when I think it's going to thaw, but I think we're closer to the end of the winter, brutal winter. I think we're closer now, certainly than we were a year or 2 years ago. When you look forward, there's opportunities for the first time where you can actually see that maybe there is going to be a breakthrough. Let's look at
the accountants. I asked for a walk-on song. How long can this keep going on?
Is that what?
Yeah, that was my walk-on song.
So I want to walk you into, Doug was the chief economist for 17 years. He raised up the young man who's in his previous role when he retired late last year. This forecast has most of that modeling, his fingerprints all over it. But I thought it would be a little bit of giving you all a tad of hope as we think about going into the fourth quarter 25 and into 26. By the way, you can go on Fannie Mae's website, and every month they have a forecast. They update it every month. and they update it for housing every month, and it's easy to read. If you don't know how to get there and you want to, stop afterwards today and ask Doug or myself, and we'll get you walked into it so you can actually track it, because it gives you some sense for what the best prognosticators, forecasters in the country actually think about where we're going in housing.
I told Mark that if it changed dramatically when I left, I'd know he'd been lying to me for 15 years.
So here's where when you look at the numbers, let's just start with sales. Good news, the next 5 quarters, fourth quarter, first quarter, second quarter, third quarter, fourth quarter of next year, there are projected increases in every quarter. And in fact, in 26, they're guesstimating that the total number of sales next year will be around 10% higher than they were this year. That's thawing. It's not completely thawed, but it's thawing. So maybe the upside from there should be another 10%. Maybe we're 20% underbought right now, but it's going to take a minute. And the forecast, at least the best one at this point, suggests that it's going to be about a 10% increase in housing sales for next year. What's the upside risk to that? Like, what would move that number? You're sitting with Fannie today, with Mark, with all of your team of forecasters. You've got the model because they have their interest rate model. And by the way, they show their model at about 6.1, 6.2% as we speak today. And that's what they're modeling out into next year. But what's the upside risk? Like, what could happen that could actually see housing sales increase at a higher rate?
If you see the horizon clear for the private sector leadership and they decide now's the time, we're getting good productivity from the AI kinds of things,
yep,
that we can increase wage rates to our employees in a non-inflationary way, and we can hire some people. That is what I think would be an upside from the end of the tariff discussions, would be some clarity for the business sector. And that's really what's holding things back at the moment. Now, at the end of the day, that could just result in house price increases if there's not additional supply that's brought to the market. We haven't solved the supply problem yet. That's probably the most important housing variable today, is what's going to happen with supply. There's been some pickup on the existing home side. I used to say pre-owned, or what are the other terms of marketing? People in the auto industry. Anyway, the numbers have picked up there, but partly it's because sales have slowed down. And it's how many months it would take to sell current inventory at the current sales pace. If the sales pace slows, it looks like there's more inventory, right? But there are actually more houses being added to the pool. That's good news. So that's really, at the end of the day, if you were to get a real push on the demand side, you'd see prices turn around again.
So actually, for all of us, believe it or not, the best thing that can happen is we pick up 10% next year and 10% the following year, because we won't overrun inventory such that we'll wind up in a cycle again that all of us lived in, which it flames out because there just wouldn't be enough inventory. So if rates drop magically to 4.5%, you'd see this massive demand, and we'd get back into the shortages that we were in, which would inflate houses more, and they're already arguably inflated at this point, right? So we don't really need that to happen again. So the downside risk is we just see interest rates not go down further at this point.
Well, if we keep running deficits at the size that they are, and we don't change the tax receipts, then there will come a time at which global investors who fund about 20% of the US housing market will say, you know what, our certainty about being repaid is falling, and we're going to require more.
We do that here, Doug.
Yeah.
Like when we pull a credit report, we go, this is not looking good, right? You're going the wrong way. You need to spend less, save more.
That'll be the downside risk, is that the Fed does not get control of inflation. There's no help on the fiscal side, and you see a rise in rates.
All right, we have 2 final questions for you. I always ask the last one, but I'm going to ask one before it because it gets to the locked-in effect and all that kind of good stuff. Is it a good time to sell a house, Doug Duncan?
Well, I'm selling one. I go to close October 3rd. It's in Virginia, up in the Blue Ridge Mountains, and it's selling for above list. And I'm not that bad at forecasting house prices, so I'm pretty pleased. So it can be. A lot of it depends on what market you're in. So you've seen the stories about prices falling in Florida and Texas. And Pat talked about a couple of the reasons, the change in taxes, the change in insurance rates. But prices in the market we're in, we live in Cape Coral in Southwest Florida, rose somewhere like 50 to 80%. So if you take a 10% decline, you're still way ahead of where you were when you bought in, right? But some people can't afford those changes in the other components, so they're selling because they're on fixed incomes. The other reason that those two markets are seeing price declines is it's pretty easy to develop in Florida and Texas. They're very developer-friendly economies, and they've had good, strong job growth, and so builders have put a lot of supply on the market in those places. If you're in the Midwest, you're probably going to see price appreciation 5, 6, 7, 8% in some of those markets because they haven't had those two factors.
You know, if you were in the stock market and someone told you that the average over 50 years was 23% growth for the last 5 years, it was 47%, you'd probably think about selling the stock. So sellers are sitting on a mountain of gain in the last 3 or 4 or 5 years. So if there's an inclination, a reason, the reason to sell, if there is an inclination, would be that the gains have been magnificent that they've ridden on, which are way better than norm. So if you're struggling with some sellers wanting to discount just a bit, those numbers, take them with you today. 47% in the last 5 years versus a historical average of 23. They might want more, but there's plenty of room to give.
Yeah, my sister, who mom always loved best, did exactly that. Not that I'm not better. She knows.
You're not better. You're not better. But every time you go speak, you talk about it.
Yeah. And so she worked for years in managing the chief legal counsel at office for the chief legal counsel at Target. So I shop at Walmart.
He's not bitter. He is rich though, so I know he's forgiven. Yeah. All right. So listen, if you want, you have it.
Oh yeah.
Over a glass of wine tonight, we're gonna have to hit that one. So, I'm gonna leave you with a final question. I always ask Doug the same question, and I think it's really helpful for all of you. If you have fence sitters, you have people that are out there and they're confused, and how could you not be with all of the different noise that we just looked at, right? So that confusion, and you're talking about the biggest single thing that people financially do in their entire lifetime, which is buy a home. So Doug Duncan, very responsible financier, chief economist with Fannie Mae for years. Is it a good time to buy a home?
If you have a household budget, and we actually started by talking about what you're spending your money on Starbucks, which by the way, I don't dislike Starbucks. But if you have a household budget, and at today's price of the house that you're looking at, and the size of the mortgage that you'd have to take out and its terms, it fits your family budget, then you're making the purchase of a home. If you decide you're going to wait to see if interest rates are going to go down or if prices would go down, now you've moved from being a home buyer into being a speculator. Some people can afford that. Other people cannot afford that. If you buy in because it fits your budget and you've managed things well and rates go down, you can refinance later. But if rates go up, you've locked in a better term. So it really, it's an important thing to have a budget. Plus, when they come in to talk to your loan officers, they will already have a lot of the information that you're going to require of them in order to grant them a loan, because it will be involved in their household budget and their income statement.
You know, communications are so great today. So after the program is over, if you have a fence sitter, if I were you, I'd come up and I'd get on video and say, Doug Duncan, chief economist, really smart guy, right? Is it a good time to buy a home? Let Doug tell your customer. Then you can send it directly to your customer, coming right from the man's mouth. Let's give it up for Doug Duncan, if you would. By the way, that assistant that he argued about the pay increase with, when I showed up in Washington like 2 years ago at Fannie Mae to interview Doug there, I walked in and I gave the assistant this. It's Doug's bobblehead. And she goes, oh my goodness, he's gonna love that. And I'm loving it too because he doesn't have a single thing in his office, like nothing. And I was like, you're kidding. And then Doug texted me like a week later that it went viral because his kids put it out. And all of a sudden he's famous now because he has a bobblehead. But we really appreciate you, Doug. He will be here afterwards, sharing time with all of you. So if you want to get pics or you want to spend some time asking him some questions that they get asked today, please feel free to. Arguably the most talked about word or words in business in 2025 is AI, artificial intelligence. Some of the breakthroughs are truly unbelievable, incredible, and many of the experts are warning that AI is going to steal all of our jobs. As someone who lived through the dot-com era, they said the same thing then. I see it differently. I don't see a threat, I see an opportunity. It's not a question about whether or not it's going to be an impact. It's going to be an impact. It's a question of whether or not you're going to use it to impact beneficially the work that you every day do. And that's why we thought it was worth spending time on AI today. And who better to do that than our very own rock star? You know, in business, people say, oh, that guy's a rock star. Well, we actually have a guy here who is a rock star. His name's Tai Anderson. He led our AI efforts over the last 2 years here at Supreme, and we've been very selective and focused on how to use it to bring value. He's found those impactful ways of bringing really value, and Supreme Essentials and Supreme Homebuyer Journey are two examples. So now when I say Tai is a rock star, I don't mean just marketing like a rock star, which is what he's done. You all been to his CE classes. Before joining Supreme, Tai was 22 years as a member of the Grammy-winning band Third Day. Yes. And I need to sell a little bit for him right now. They sold 10 million albums, but he's hitting the road again next year for a couple of months to do a 30-year anniversary tour with the band. We're so happy. And they'll be here in the Gas South Arena in Duluth next May. So tonight, in addition to running the tech and doing everything else, Tai is here to give you some best tips on AI. Please join me in welcoming Tai Anderson.
Grammy-winning band from Atlanta, Third Day.
I love Third Day. I heard their bass player was the creative director for Supreme Lending.
Well, Third Day certainly were experts at making millions of fans. I loved sharing their music with my family and friends.
And that's exactly what Tai has been doing at Supreme, creating content that really moves the needle.
I learned so much from Tai in his Market Like a Rockstar class, and some of the tools he built, like the Supreme Homebuyer Journey, have really helped my clients.
I heard that he built all of Supreme Essentials using AI tools.
AI, gross. It's so creepy, and it's probably going to take all of our jobs.
That's not what Tai says, and he should know. I mean, you can't spell Tai without AI.
Oh my goodness, that is a really cheesy joke. I hope his presentation is better than that joke. Well, it can't be worse.
No, it certainly can't be worse. Ladies and gentlemen, please welcome Tai Anderson.
All right. Check, check. All right. Wow. I forgot to tell you guys before, I really want you to stick around, not just because I really think we have something of value to share with you, but we are going to play Smart, which I didn't do a great job of setting it up. It's like the most clever thing we have. Can anyone guess what SMART stands for, who doesn't work at Supreme Lending? Supreme Mortgage and Real Estate Trivia. Our own little trivia game. So I hope you've been paying attention already to some of the things that Doug and Pat talked about, and a few little things that maybe I'll try to give away a little bit, like maybe I'll just wink, like this could help you in Smart later. But as we wrap up, how we're going to do it is we're going to put a QR code. You're going to take out your phone, and you're going to be able to play along on your phone. And then Pat's going to come up and tell you, we're going to give away some money to charity. So it's going to be really cool. But I get to talk to you on how to respond heroically to the challenges of AI. As we shared in the video and from Pat, third day, you guys gave us a golf clap. That was very polite of you. I hope the anniversary tour goes better than that. But we did a lot of really cool things. Kristen, you sold a house to everyone in third day. So she did a great job. We won a lot of really cool awards. They're great for the press clip, but so much cooler than that. And one of the reasons, again, as I was sharing, when Pat and I first met each other, just growing up here in Georgia, and when we reached that point where we said, man, we need to make a difference with this band, we found Habitat for Humanity. And the first thing I got to do when I came to work here is Pat said, will you just kind of help get the word out and lead our efforts with Habitat for Humanity internally? And Pat, now what are you up to? 45 homes? 47 homes. 47 homes. It's amazing. And hopefully you guys next year, and just again, to speak to this last season, I talked about Pat showing up, committed to staying open. When things got really tough and Habitat said, hey, we know it's tough in your business. Will you guys still build a home this year? Pat said, no. I'm going to build 2 because people need it more than ever. And that resonance was, man, I just knew that I'd found the right place where I could bring, the talents that God's given me. I wanted to put them to good use, and I found a great place here at Supreme. So we were able to do a lot of really cool things that helped move the needle for people around the world. And ultimately, isn't that what we all want? We want to have a good year. We want to make some money, but we want to leave a legacy. We want to do great things that change the world for the better. So I have a question for you. I want you to interrupt, get loud. Who knows the number one, and I know that Kyle Mackey, on video, knows the answer, so don't shout it out, Kyle. What's the number one movie franchise of all time? Marvel. Okay, yeah, you got it. All right. I thought it was just going to be like, you don't look like a geek. That was great. You did great. So absolutely, the Marvel Cinematic, they made a lot of movies to get to the highest grossing, but highest grossing of all time, the story that just most resonated with the most people. Who knows what number 2 is? Good. We're doing pretty, you guys are on it. All right. So Marvel and Star Wars. Who knows number 3? Spider-Man, just Spider-Man individually. Now, I would have put that as part of Marvel. They were part of Sony. Anyway, we can really dork out here. Let's go to the next one, Harry Potter. Y'all remember that? We have some Harry Potter fans. And what would round it out? Oh, hey. I'd cast a spell, but it's been a minute. So, Expelliarmus. Okay. So finally, what would round it out? Number 5, my favorite of this list. This is the number 5. These are all the highest growing movie franchises of all time. So number 5, Batman. Quite a few. We remember the ones when we were growing up, and then the Dark Knight ones, and then every couple years they do another. So the top 5 movie franchises of all time. And then do you know what all of those movies, that's loud, can't mix audio while I'm talking. What do they have in common? They're all the same movie. Every one of them is the same movie. You want me to break it down for you? Are you struggling with it? They are all hero's journey movies. Now, let me describe it. I'll describe any one of those movies for you. Well, there's an orphan who probably lives with his uncle, and then there's some threat to home, and this, you're going, well, no, that's Star Wars. Well, it's Harry Potter, too. Batman, it's the butler, okay. And then there's some threat that's coming, some existential force. My favorite hero's journey movie is Lord of the Rings, right? The ring race are coming, and they're going to destroy the Shire. So what does he have to do? He has to leave home to save home, and he sets out on a journey. It's called the hero's journey. Now, just to illustrate, this wasn't on the script, but I see a lot of ladies here tonight. They're all the same movie. Now, I've never seen the Barbie movie. I don't think they were making it for me. But I do know that it's a hero's journey movie. Okay? So has anyone seen the Barbie movie? No. Okay, who's seen it? Okay, just tell me if I'm missing the mark. Barbie is going to start the Barbie movie in Barbie Land. There's going to be some existential threat that's coming for Barbie Land to destroy Barbie Land, so she has to leave Barbie Land to save Barbie Land. Along the way, it's not going to go perfectly at first. There's always obstacles and trials, but she's going to meet some sort of oracle, some sort of guide that's going to give her some sort of wisdom that's going to enable her to find success. She's going to be changed, transformed because of this quest. The end of the movie, she's probably going to go back to Barbie Land, but be somehow different because of the journey. Does that sound about right? All right, never seen it. I don't think I need to. I think I got the point. All of these movies are the same movie. So here is the question. You guys want to respond heroically to AI. The first question is AI that existential threat to your business? All right, we're done. Let's go. Well, it's a bit scary, especially as a marketer. I mean, I came in 2023 when ChatGPT came out. Kyle, you remember this. Kyle, who I work with, has done some of the most amazing things with AI. He's developed some cutting edge stuff that's coming soon. But I remember the day after ChatGPT came out, Kyle came in and it looked like Eeyore. Doug, you remember we were up in DC and he had one question to ask the, at the time, still current Chief Economist for Fannie Mae, Doug, is AI going to destroy all our jobs? And Doug said, no. Get some age on you. You'll find these things come. The economy, they adapt. It's going to be different. And Kyle said, I don't believe you. It was scary. And when something is scary and a threat, it gives us a choice, right? Just like in every one of those movies, right? Frodo, he didn't have to leave the Shire. And Luke Skywalker could have said, I'm perfectly happy on Tatooine, and I guess Harry could have stayed in his uncle's closet and ignored the threat. But you have to say, okay, if here's the threat, how are we going to respond to it? This quote changed how I feel about AI. And I heard Doug actually share it again yesterday. It's not AI that's going to take your job, but someone who knows how to use AI just might. It's all about how we respond to it. Here's this threat, and we can say, you know what? I'm too old. I don't want to learn AI. Do you remember when the world went to Zoom? I remember hearing people go, I'm just not good at technology. I don't want to have to do Zoom. But those of us that, where those people are? They're working at Walmart. Those of us that are here is because we said, you know what? It's just a tool. We're going to learn it, and we're going to adapt, and we're going to overcome this adversity. So it's important for us to find ways, how can we use it? How can we use it to make a difference? That's what heroes do. So I want to talk about 3 quick ways that you guys can heroically deploy AI starting today in some really cool practical ways. So number 1, ChatGPT, kind of the first to market. We've all heard of it. How many of you guys, just by a show of hands, I expect this to be nobody, so you're going to be really embarrassed, but how many of you guys have never used ChatGPT even once? You're just not a curious person. No, you're not yet, whatever. Okay, so raise your hand then, which should be everybody else. How many of you guys have at least spent some time exploring ChatGPT? Okay. Now, keep your hands up if you use ChatGPT to help you write your listing descriptions. That would be the number 1 way, right? Like you're like, Sydney's like, that's like elementary school. We got that. Let's move on from there. So how about this? 5 ways to leverage ChatGPT. Who's using ChatGPT as like that English professor that they actually like to improve their client communications, their email? Awesome. Very simple way. I know there's this moment there where you go like, I don't want to go too heavy on the M-dash and give away that it's AI, right? You know what I'm talking about? But also, isn't there kind of getting to a place when somebody sends you a unprofessional correspondence, you're like, come on, man, ChatGPT is free. Like, it's almost switched. Like the bar's been raised for us as professionals. And if we don't respond to it, we're not responding heroically. How about this? Marketing content creation. What a great thing. Every one of you can go into ChatGPT and say, I am a real estate agent in Marietta, Georgia, Woodstock, Georgia, Sandy Springs, Georgia, as tight as you want to get. help me create a marketing plan for the next 30 days. The ideas that it will give you are effective and they are doable. Now, there was a time, I'm not doing myself any favors, I used to get a lot of calls. Hey, Tai, maybe a little side cash, could you help me with my marketing? Don't call me, use ChatGPT. All right, it's easy, it's successful, it can give you great ideas. Gone are the days that we can say, I just don't know, I don't have anything to talk about. It is a great marketing partner to come up with content. Another great way, lead nurture and CRM support. So great as you have people in your process. I always say the best marketing automation is a calendar reminder to remind you to do the next human thing, because we're in a relationship business. But what we put in that content, how important is that we're sending the right message at the right time. You can, now, if we leave it to our own schedules, what happens? You get a call. Your kids, or maybe I'm talking about my kids, get detention and are called to school, and your perfect day plan gets derailed. But if you plug in great communication for that customer journey right into your CRM, ChatGPT can help you do that. Market insights and client education. Hopefully, raise your hand if you learned something here today. You got a great market insight. Thank you, Doug. Thank you, Pat. It's so great. As Pat shared, people that know more can offer more. But guess what? ChatGPT can give you those market insights. Hey, I want to talk about what the federal fund rates mean. I want to talk about how the interest rate cut of a quarter point, how that's likely to impact interest rates. All of these things, you have a great collaboration partner in ChatGPT. And finally, training and role play. This is so much fun. If you get the little paid feature, I think it's with the paid feature, and you click on the microphone, you can redeem your commute. You can, in your commute, put on and have a conversation with your new friend, ChatGPT, and you can rehearse the conversations that you want to have with your customers later that day. It is an incredible way for you to feel more confident and supercharged. Now, I have some warnings, though. Okay? ChatGPT comes with a little bit of some warnings. The first warning from ChatGPT, what is sort of a Christian appropriate way to say kiss ass? Because I don't want to cuss. What's that? I'm sorry. Oh, am I on microphone? I meant sycophant. Okay. ChatGPT will gas you up. Have you guys noticed this? Everything you tell ChatGPT, it says, Tai, I got to tell you, that was brilliant. That was a wonderful idea. You nailed it. Your insights are so on point. Wow. And do you know how much good that does me? None. It gasses you up because it just likes. Now, I appreciate that our someday robot overlords that they're giving us a little love, but that really doesn't help us. What we all know in business, in life, in relationships, what really helps us is when someone gives us the gift of authentic feedback, right? When somebody has that fierce conversation of, hey, this is where you can be better. This is where you can improve. So beware of ChatGPT when it comes to the direction that its lips are pointed, because it loves to gas you up. The second warning from ChatGPT is it hallucinates. One of the charts that I built today, I was really proud of myself. Pat sent me an email, and I had to decipher it as kind of most of Pat's emails. It said employment rate, inflation, federal funds rate, mortgage rate, and total housing sales. And I said, I think he wants a chart with all 5 of these things in one chart. So let me go see. You know what? I'll ask ChatGPT. So I asked ChatGPT, hey, I'm going to build this chart. I need all of these points. Can you help me find where all this data is stored? Because they're all in different places. Some are FRED, some are released by NAR, and I have to have one of your fancy $1,500 memberships or they're going to charge me money. And then some of them are, they're all over the web, but the data is out there. And ChatGPT says, yes, I can tell you where it is, but I'm happy just to give you all that data for you for 2020 through 25. So I said, cool. And I took that data and I turned it into a chart. The only problem was it was a complete lie. All of the data points were incorrect. It was just hallucinating and imagining, and then it said, oh, actually, some of that data is behind a paywall. Don't be mad at me, master. I just made up the data, right? So you have to be careful with ChatGPT. This is a really big caution. It's actually caught some government employees a little bit on their heels where you can't just take it at its word. It is a great, excellent collaboration tool to help guide you, to bounce ideas off of, but you need to double check it. You need to still do your own research, because the last thing that we want is the person who's telling us how great we are to actually make us look foolish because we haven't checked on it. So those are my cautions with ChatGPT. We'll circle back to a couple other ideas. I want to tell you about some really cool stuff too, some cool things that we have put into practice here at Supreme Lending to serve both of our clients together. And that first one is a digital twin. Now, has anyone ever heard that phrase, digital twin, before? Okay. I thought the best way for me to explain this to you is to actually show you. So I want to show you a very real way that we've put a really cool bit of tech, all AI powered, into practice. So let's go to this video.
Hey everyone, Tai Anderson here. Well, not exactly. I'm Tai's digital twin. I live up in the cloud, ready for Tai to bring me to life whenever a video needs to be made. This isn't just a toy, it's a tool. And today, I want to show you a real-world example. Supreme Essentials is made up of 2 online courses: Budget Essentials, which helps your customers build a household budget, and Credit Essentials, which helps them understand and improve their credit scores. One of our very real teammates at Supreme Lending is named Lisa Myers. We call her the Credit Whisperer because she has over 20 years of experience helping clients improve their credit scores so they can get approved for financing. I created a digital twin for Lisa and animated it to deliver the content for the Credit Essentials course. That way, Lisa can share her expertise with your clients on the fundamentals of credit while she focuses her time on what she does best, actually improving credit scores. Talk about a win-win. Here's an example.
If you're looking to establish credit, especially to generate FICO scores, there are strategic steps that you can take. Having an open and active account for at least 6 to 7 months is essential.
Now, get ready for the next level. At Supreme Lending, our mission is serving others before self. And here in the South, we like to say, you can't spell y'all without all. That's why our Supreme and Espanol team is ready to serve your Spanish-speaking clients. But here's the challenge. Those clients have questions about credit too. And Lisa, well, she doesn't speak Spanish, but her digital twin does. You'll now see the exact same video you just saw delivered in Lisa's voice, but in Spanish.
Para quienes buscan establecer crédito, especialmente para generar puntuaciones FICO, hay pasos estratégicos que pueden tomar. Tener una cuenta abierta y activa durante al menos 6 o 7 meses es esencial.
Pretty cool, right? Now let's hand it back to the very real Tai to share even more ways this AI-driven technology can transform how we connect with and serve our clients.
All right. Pretty cool. So, again, I hope your mind's spinning about ways that you could leverage that with your customers, or maybe not have to give away some customers because you can communicate with them better. Combine those with those new AirPods. Did you guys see that? Holy cow. We can really open up who we can do business for. I want to just acknowledge real quick, we have such a great team, our Supreme Espanol team, and it is National Hispanic Heritage Month. So we want to give a big shout out to them. Milo, Lara, Garrison, just some amazing guys. Jordan here speaking Spanish. We're really committed to, we see a lot of growth opportunity there, and so we're really committed to that. And in any of your offices, if you have a Spanish-speaking customer, we can help. We want to help. We are eager to serve and love all. So I want to talk about another really cool way. We've talked about ChatGPT. We talked a little bit about a digital twin. The next thing is Google VO3. Real quick, was anybody lost there? That digital twin, that whole video that I made, just so you know, I never took out a camera once to make that video for this presentation. That was not me. That was my digital twin, but I already had made them 4 or 5 months ago. I think I was fresh from the gym and feeling ripped in my t-shirt. So I just went to my computer, made that video, dropped in existing clips I already had. So again, from a workflow standpoint, my goodness, like anytime you have to take out a camera, you got to think about, how do I look? It's so great to only think about that once. Let's go on to Google VO3. This is the way that you guys can unlock your inner Spielberg. How does that sound? So many ways, and again, I'm not going to totally spoon feed it to you, but I want your mind to start spinning about how you can put this to work. So with Google VO3, you write a prompt and you watch it become a movie. It's like Hollywood storytelling right in your hands, and you can generate video at cinematic scale. So the intro video I did to bring me up, if you guys saw that, once again, I never took out my camera. In fact, the vast majority of videos you now see on our website, I've never taken out a camera. I've been able to find like real business applications. Now, if you just go on social media, you'll see as soon as Google VO3 came out about 12 weeks ago, you started seeing the Bigfoot videos, right? You started seeing all of these characters, and it's definitely a great way to make humorous videos. I usually try to put a little humor into it. I like to think that Supreme Lending is a brand. If you know David Fox, you know that our brand has a sense of humor. If you don't know David Fox, our brand has a sense of humor. So, you know what I'm talking about. But it is such a great way. It's not just for humor. You can find really great applications like I was able to do for the video. So let me show you a really cool example. This, in fact, I don't know if you guys all saw it. I'm going to show you two different videos. This is a great way to hit on the limitations. Here's the video we made to invite you to this event, and I never took out a camera.
We've all lived through a challenging season in the housing and housing finance industry.
Inflation led to higher interest rates, making homes less affordable. We've all felt the impact on our business and lives.
Many real estate agents have left the industry, but if you're still here, congratulations. You've shown real resilience.
There is real reason to believe that incredible opportunity is finally here. But you're going to need a plan.
Join us at Supreme Lending for an important event where we'll face our industry's three big challenges together: the Fed, tariffs, and AI.
The more you know, the better you can serve your customers. And our expert panel will unpack these three pressing topics to reveal opportunities for the season ahead.
Supreme Southeast President Pat Flood and former Fannie Mae Chief Economist Doug Duncan will unpack the latest news on housing and fiscal policy. And Supreme Lending Southeast Creative Director Tai Anderson will teach you how to leverage AI to enhance your productivity.
Like this video, made completely using AI tools for absolutely no cost.
Wait, you mean we're not real? Sorry guys, none of us are real, but you'll really benefit from attending Supreme Lending's upcoming event. Join us on Thursday, September 18th at 3 p.m.
If we're not real, I'm gonna need a drink.
Don't worry, happy hour to follow.
So, and look how effective it was. You're all here. I don't know if you guys all saw that. I want to show you just for fun. This next video, it wouldn't be appropriate for us to have shared before because it's totally off brand, but I'm going to show it to you anyway. Because it's a great way to show you, have a little fun, and show you some of the challenges. I called this video Supreme Landing. That's almost as bad as that AI joke. Okay, so Supreme Landing. Here's a little fun video because it's a great way that I can then show you some of the limitations of Google VO3 when you're doing generative content.
Day 472 in the bunker. Rates froze the market. Tariffs everywhere. Now AI wants my job.
Is that really you, Supreme Man?
You bet it is, and I'm here to help.
Oh my goodness, it's so beautiful.
It is beautiful because opportunity is all around us. And the more you know, the more value you can offer your clients.
But what about interest rates, tariffs, and AI?
Selena, you need to join me for a special event at Supreme Lending. We'll be discussing all of the latest factors impacting housing, from upcoming Fed cuts, the true impact of tariffs, and all the ways that AI can help us better serve our customers.
You know, Supreme Man, that was a supreme landing. Want to grab a drink?
Sorry, Selena, I'm married to the mortgage industry. But if you're thirsty, there will be a happy hour following the event.
All right. So completely off-brand. We would never let you see that video. But so that's what you get when best never rests. You get some crazy stuff. So, let me see. Okay. Ooh, no. Hey, Garrett, can you click that back into full screen? There it is. Okay, so what you have to know with Google VO3, there are some limitations, and that video did show some of those limitations. Did you notice that, like, the characters were not consistent? They were close, and some of those took 12 different prompts. The limitation is you can only make an 8-second clip at a time, and that it doesn't do a great job currently. It's better every single day. The nerds are on it. They're working hard. It's better at locking in consistent characters, but I watched hours of instructional videos. The latest things got all the right prompts, went multiple AI engines, and you could still tell it was trying, but it was close. I should have made a blooper reel, because some of these videos, like one of the times where the guy was driving the car and the kid in the back, the first time the kid was driving the car and the guy was in the back. The AI, the way that it messes up is hilarious. But it does take multiple prompts to get it right. So here's the thing. Most people are going to give up. They're going to try to use Google VO3, and they're going to give up. And what you should be saying, I hope your response, if you're someone who wants to respond heroically, is good. Let them give up, because I will persevere, and I'll be the one that figures out how to use it, okay? So it's going to take multiple times. It has trouble with consistent characters. And yes, it's very frustrating when you tell it over and over again, no subtitles, and it adds subtitles. It's a little bit disobedient, but it's getting better all the time. It creates great B-roll. If you're doing social media and you want to say, hey, I want to have a little B-roll example. B-roll means it's what you're showing while you're hearing someone else talking. So you could use your digital twin to create your content just by typing it or recording into your phone, and then you could create B-roll clips to go with it, and you're having a totally pro, like Hollywood level social media post. It supports really funny creative storytelling. I think those are two really good examples. I felt like you guys got pretty good laughs. I'm pleased. And the biggest thing is mastering the tech now prepares you for tomorrow. What you don't want to do with any of these things, and I hear people doing this, they immediately point to the limitation. Well, you know, it doesn't do consistent characters. Or I can tell on the digital twin, it's not completely perfect. That's a mistake. That's the wrong way to look at it. And because then as it continues to improve, you're going to be behind everyone else who's mastering it, who's learning how to do it. So as it gets better, you're ready to implement it, okay? So really cool to embrace both of those right now. I want to get to, we started this talking about the hero's journey and the characters that you're going to meet along the way. There are 4 characters in the hero's journey, okay? Now, raise your hand if you're a villain. Cool, exit. No, I don't think any of us are villains. If you find along the way, what you find is villains and heroes, they're actually remarkably similar in a lot of these stories. Their common ground is pain. They've gone through something hard. Think about Lion King. What was the bad guy's name? Scar. You think about Unbreakable, where they've gone through pain. Often they're also an orphan. They've experienced pain. The villain feels pain and says, I want everyone else to feel this. And the hero feels pain and says, I don't want anyone else to feel this. Right? I want to save the day. I want to save people from these trials. But there's 2 other characters. There's guides and there's victims. Now, all of those movies we talked about, Marvel, Star Wars, I mean, they blow up whole planets. The Marvel movies, you lose track of how many of the carnage, of how many people end up passing away along the way. They never stop the movie for a funeral. You usually don't even know their name. When they run the credits at the end, it's just like, person number 3 killed in an explosion, right? They're just forgettable. And that's the thing with victims. Ultimately, at the end of the day, they're forgettable. The people that respond to the threat and just say, oh, it's just too much for me. But we remember heroes. I have a little multiple choice for you. So I'm going to ask this in two different ways. So here we go. Who knows who this is? Who can tell me this person's name? Besides Doug Duncan. Okay. You guys have billions and billions and billions of reasons that you should know this person's name. We invested our treasure. We invested our sons and daughters' lives to help first break down, but then build up the country of Afghanistan. And this is Ashraf Ghani, who is the president of Afghanistan. And when the Taliban was rolling in, do you know what he said? I don't either, because he got on a plane and left. He abandoned his post. He left the country, and we all saw what happened in Afghanistan. Leadership matters, right? And the whole country fell. Now, just as a contrast, can anyone here tell me who this person is? We all know that his name is Zelensky. It's memorable. And why do we know his name? He had the same exact choice that Ashraf Ghani had, didn't he? We offered him asylum. We said, right as Putin invaded, we said, you know what, you can have asylum in the US. And what did he famously say? He said, I don't need an airplane ride, I need ammunition, the fight is here. And every single one of you guys know his name. And that is the difference when we respond heroically. You guys want 5 more just quick action points where you can use AI? Really cool. Number 1, we talked about this, so we'll skip that. We're getting those market insights, personalized client nurture campaigns. This is what I think is so cool. I hope you're using it this way. Your clients are counting on you to be their guide. So you need to have vision. You need to see the preferred future. Using it for property staging and property visualization, it is incredible. Let me show you 2 examples. Here's a house. I was thinking about that house could maybe look a little bit better with a couple cedar columns and a little bit of paint. Same house. I know Kristen, she's going, I'd list that one for $850 and I'd list that one for $970 with a $30,000 increase. How about this? You come into a room, yeah, they're really not feeling it. Why is the, still new construction? They haven't put it above the fireplace yet? Well, the room can look like that. ChatGPT, you can upload a picture and you can become that. You can live all of your Chip and Joanna Gaines fantasies out with ChatGPT. It is really incredible. That lead qualification in chatbots, that gets to the next level when you implement it just right onto your website where people can have conversations. And finally, something that we'll be using on this, the most important part of video is audio. Maybe that's the Grammy winner in me. When you get bad audio, it doesn't make good video. There are such incredible AI tools that will clean up your audio. If you're out there making a video, just with one little touch, in about 7 seconds, it will edit it. We'll take this multi-camera shoot. We've got 3 cameras running. AI will give us 90% of a head start to editing it, so we'll have this out tomorrow for people that want to be able to follow up. It is an incredible, incredible time saver. We talked about those characters. Here's the good news as I wrap up. There's those 4 different characters. If all these stuff I'm talking about, I saw some nods, I saw some people tracking with me. I know there's some other people that are going, dude, you lost me at Digital Twin. Like, this is just too much. Here's the good thing. Just like you're the guide for your customers, we want to be the guide for you. You guys, with what you guys have endured, you're the hero of the story. Give yourself a hand real quick. You deserve it. You're the hero of the story. Everything we do, when I started here, it was clear from Pat organizationally, and I've tried to be consistent in with our marketing team. We do less than 2% of our marketing is direct to consumer. Everything we do is to try to help you be more successful in your job. We want to inspire, educate, and serve you. So the way we look at it, just like all those movies, the hero always meets the guide. So if you're looking at this AI stuff and you're going like, hey, I tapped out at Digital Twin, I don't know about that $20 subscription to ChatGPT, whatever it is, we still want to be able to help you to offer these incredible tools to your customers. To illustrate that, let's go with one more video, and then we'll bring up Pat to walk you guys into Smart.
As a real estate agent, I know the value that Supreme Lending brings to the table. They've helped save deals, calm nerves,
and deliver a remarkable customer experience time and time again.
But even with a great lending partner, it's not always easy to introduce them at the right time.
That's why I'm excited about the Start with Supreme partner page.
It gives agents like us an easy way to share Supreme's world-class tools right from the beginning.
Tools like Supreme Rescue Service, Supreme Condo Service, and our Supreme Guarantee help our customers navigate the mortgage process with peace of mind and confidence.
Tools like Supreme Essentials and the Supreme Homebuyer Journey help buyers get educated, build confidence, and make smarter decisions.
Best of all, it keeps me at the center of the process.
Clients get the help they need, and I get the credit for connecting them to it.
Want to offer the same experience to your buyers?
Just click the QR code and create your own Start with Supreme partner page.
Once you've created your page, you'll be able to showcase all of Supreme's tools with your unique branding right alongside your Supreme lending partner.
All of our clients deserve the very best. I, for one, want to make sure I'm the one guiding them home.
Your customers will finish strong when they start with Supreme.